English shorthand 100 word per minute. Start. The profit and loss account of a company is normally divided into two sections, namely the trading account, which is designed to show the gross profit arising from the purchase and the sale of goods, and the profit and loss account, which show the final net profit after all expenses of running the business and selling the goods have been deducted. In the case of manufacturing concern, the trading account is itself divided to show details of the cost of manufacturing the product as well as the gross profit on selling them. Para. The balance sheet sets out the liabilities and the interests of the proprietors at the close of the accounting period and disclose the financial state of affairs at the date. Para. It must be remembered that the balance sheet is not an account but a statement of the balance in the book. It cannot be said that the balance sheet is a statement of assets and liabilities only because some of the debit balances may not represent assets in the ordinary sense of the word but may take the form of losses not written off, expenses carried forward, etc. On the other hand, credit balance may be included, which are not liabilities but represent part of the interests of the proprietors in the net assets of the business. For example, an accumulated balance of profit carried forward, etc. Para. Neither is the balance sheet is a statement of values, since the amounts at which certain assets appear in the balance sheet may be remote from their market values at the date on which the balance sheet is drawn up. Para. It is convenient to regard the balance sheet as a statement showing on the one hand the funds employed in the business and the funds from which those sources are derived. Examples of such funds are capital brought in the proprietors, profit which have been drawn, loans, bank overdraft, as well as liabilities to creditors. On the other hand, there is the employment of these funds, that is, the assets acquired by the expenditure of such funds to the extent that they have not been used up or written off out of profit. Para. The value at the fixed assets as shown is not their market values but the amount of capital originally spent on acquiring them less such part as has been used up.